Hello everyone and welcome to the ZoomX Europe channel. We're back today with a new video on BTC. So BTC, since the last update, you've had quite a run, haven't you? We had a long opportunity here under the liquidity engineer before heading out again. There was a re-entry here at the 61.8 level, which unfortunately happened as you can see. On the last update, we had given this zone, there was the bounce in this zone, then we bounced back, we came back in this zone that we had given in the last market update here, and we had our movement which went up. So now that we're here, what you need to know is that when we went up here, we created a CME gap here, and we also passed the weekly level which was here. So there are two possibilities. Either the market continues to rise until it reaches the zone indicated on the right, or we can correct and come back to this zone. Right? So the zone where I'd be interested in opening my next long, possibly if we don't break above first, it would be here. I.e., if we go straight down, it would be here. If we start climbing above here, and then we create my pattern to come back down, I'm not going to go long here. There will be a TP to take on the short when we go back down into the CME, but it won't be a good setup. This setup becomes valid if the current zone starts to break. For example, we break downwards, we lose the weekly, which had gone into support. We lose it. It becomes resistance, at which point we go into the CME gap. If we're in the range now, we stay in the range, and we start to move up. We won't go into the CME gap. There won't be any other entry. The best entry was here. The second was here, right? Long, of course. Once this high has been ejected, we'll have to correct all this movement. So, long here won't do any good. Long higher won't do any good. You'll have to try long at the bottom of the leg, okay? So for now, for long, the best scenario you can have if you haven't entered is to lose the weekly, go below it, retest it as resistance, and retest the CME gap zone. From there, you can open your trade and then aim for the high. If we don't lose the weekly in this zone, we'll continue to climb, and we'll probably hit the daily here because there's the daily and there are also several NPOCs in this zone. So we're either going to stall in this zone, or we're going to go above it and like break, or we're going to SFP. So there are three possibilities, and all three give the same result. That is to say, one is break, well break, the second is get into the zone, retrace, and the third is get into the zone, wick above, go back down. So, given that the market has already got off to a good start, and that we're currently in a kind of four-way range, I'd advise you to wait until we get to 5, and then see what we do on 5, to see if there's a short setup. If there's no short setup, we'll wait for a pullback anyway to go long, whatever happens, because right now your trend is bullish, and you'll be taking short risks for nothing. So long, the last liquidity zone is around 712, 481, roughly. 712, 481, that's about right. So that's the last liquidity we created on this leg that came down. So the longs potentially have to go and get all those highs. So this high is missing, and once it's gone, we'll have no one left to go after. We'll be in a POU, we'll call it, and we'll see what he does in there. In any case, he's not done yet, because there's still this liquidity. Given that we've gone over the weekly and we're not going back under it for the time being, I think we're going to do a new ATH. So it's just a personal opinion, but in my opinion, we're going to do a new ATH, because we've gained the very important level that was here, so unless we lose it in the meantime, but for the moment, from what I can see, we're going to do a new ATH. So we're going to have to be careful now, and let's imagine you arrive on the previous high. So everything's going fine there. You keep going up, but when you arrive on the previous high, you start going up, down, up above, then back down below, and break the structure. At that point, you'll have to be careful, because it'll be a diversion at the top of the range. Because here, what you can see is, if you zoom out a little, we've got a high here, we had the low here, and when we came back, we didn't take the low, so we didn't break the structure. So it's like I keep going up, my market does this, and now we're going to do this, okay? We haven't created a new low, so it's bullish. So the idea is to wait and see when the move ends, to see how far it goes, and in any case, the one we opened here was pixel perfect. The second one you could open was on the 61.8 here, on the way back, in the 61.8, 78.6 zone, before going back. So, My advice for today is that if you're not in long or short, you've got this range that you can try to trade eventually, okay? Crashes like the ones we're having here, or like the ones we're having here, we're going to have a lot of them, and we need to be aware of that. So, despite the fact that we're in a bull market, you're going to have a lot of retracements every time to get out the people who are abusing leverage. So, if you're patient, we'll come back to the prices you've seen in previous days, but you'll have to be patient and grit your teeth on correction days, because they can hurt a lot. Okay, guys. So, watch out for the CME gap finally. As long as we're in this range, we'll stay in the range. We can possibly make a new ATH. We can cancel this idea out. In the short term, if we lose the weekly, we'll come back here before potentially making the move I'm telling you, and if we don't lose the weekly, we'll certainly go for the ATH pretty quickly. Okay, guys? So, watch out for this area if we break the range for long, and watch out for the drift should it ever happen at the high. Right, guys? So that's it. That's the market update for this week. I hope it's been helpful. This is Mimstars for ZoomX. Take care. See you next week. Ciao, everyone.